Okay, guys, so we're going to have a look at gold prices at the moment, which is being affected by a rising US dollar, and that's being affected by government 10-year treasury yields in the US spiking at around 1%. So let's just have an understanding of gold and its correlation with the US dollar. Remember, gold is priced in US dollars. So when the dollar is getting weaker, gold therefore gets stronger because gold is now priced in dollars at a cheaper value when you have a weakening US dollar. So we've seen, guys, in 2020, the US dollar was getting very weak, and that was because the central bank in the United States was cutting interest rates to deal with the pandemic. And we saw from the highs during the pandemic, before the Fed started to cut rates, and then once the Federal Reserve did start slashing rates last year, we saw the dollar depreciate by around 12%. And that goes hand in hand with a very strong rally in the price of gold. So, of course, when interest rates in the US was going lower, the dollar was getting vastly weaker, and then gold was becoming even cheaper. And remember, gold is a hedge against inflation. And with all the money being pumped into the economy from the pandemic, with the central bank's quantitative easing and the fiscal stimulus packages coming from the US government, obviously that pushed up gold quite aggressively, rising around 40% to the highs of the year before we did get a pullback in price. So what's happening now? Joe Biden has won the Senate. He's won the House of Representatives. So he has control of Congress, which basically means it's easier for Biden and his administration to put through big fiscal stimulus packages in 2021. So that could mean an extra $1 trillion being pumped into the US economy. That would obviously be inflationary. And in that kind of environment, we must remember that the demand for treasury yields drops dramatically. And because the demand has dropped dramatically, the price has, because the demand for treasury yields has dropped dramatically, this has been the fundamental approach to why markets have pushed up the price of gold. So moving forward, guys, we have seen treasury yields spike higher in the last week, and that's caused the US dollar to strengthen, because remember, the interest rate differential is basically the interest that the government is paying on its debt, and that has a big impact on the dollar's appreciation. So with 10-year government yields going higher, this has dragged the US dollar stronger in the markets. As we can clearly see here, in the last few weeks, we've had a pullback in price. And of course, when 10-year yields go higher, the dollar gets stronger, gold moves in the opposite direction. And that's the fundamental reason behind gold pulling to the downside. However, let's look at the bigger picture. The US dollar is getting very weak. You can almost say, of course, within a trend, you're going to have pullbacks in price. So within the trend, you're going to get these pullbacks here, pullbacks again, and then another pullback here. Probably going to continue to see the dollar weaken to the downside because, again, interest rate differentials are against the US dollar. You've got a massive current account deficit, meaning more dollars are going to the rest of the world than are coming in. That's increasing the rest of the world currency reserves for the US dollar. And we have huge fiscal package coming from the Biden administration, which will just mean more dollars will end up finding their way abroad. So that should structurally continue the dollar weakness. And in that situation, you would expect gold to rise further on down the year and continue its bullish trend, especially with the inflationary risks that come with more fiscal spending moving forward. So that's just the fundamentals behind gold going lower in the last week. It's just because the US dollar has risen, and that's because treasury yields, the interest on government debt has increased, and that is why gold has become more expensive once the dollar sees an appreciation in price. So hope you understand that, guys. The fundamental trend for gold should still be bullish, because if we look at the bigger picture, we must remember when we're looking at gold, it has already spiked higher over the past few years. If we look at the last few years, we've seen a very strong appreciation in price in gold since 2015, as it's been continuously moving to the upside. That is because, again, as interest rates are lower in the US, near zero, huge fiscal stimulus being pumped, huge amounts of quantitative easing being injected by the central bank, that increases the risk of inflation. But if investors are not getting paid enough interest to cover that inflation from government bonds, then they have to buy alternative assets. And one of that is gold, which is intrinsically always being the risk of a debasement in fiat currencies, and a debasement basically means where they just keep printing so much money that it devalues the currency to a point where the interest rates no longer protect investors from that inflation. So again, of course, the bias for gold should still be positive in terms of a bullish long-term outlook. But at the moment, guys, we are just seeing a pullback in price. So that's the fundamentals driving gold at the moment. As long as you understand that, you can understand what's happening. And again, I'll keep you guys updated. Thank you.